Good afternoon. What's going on, guys? It's Ricky with TechBud Solutions. So I'm still feeling absolutely terrible. I'm a little under the weather, but I wanted to come on here and quickly talk about where the market is right now. So the first thing that I want to highlight is that Trump had a press conference today. I live streamed it earlier today where he pretty much gave us some idea of what the US and UK trade deal consist of. So supposedly it was a deal that's been in the works for years. It hasn't been able to get done, and now it's finally actually getting done. So supposedly this is supposed to open up the borders for the US to be able to import or export more products into the UK, and vice versa, also offer some incentives to the UK so they can purchase Rolls-Royce engines from Boeing or something like that, to the amount of $10 billion. Once that news came out during that live stream, I'm sure a handful of you guys saw me do it. I looked at Boeing stock, and Boeing stock gapped up a quick 2% just based off of that news. Nonetheless, it looks like the ball is moving. It hasn't been signed yet, as they're still working out, I guess, like the final details. But during this press conference, this is what everyone is talking about, and I just want to make sure I do my part in making you all aware. He says, you better go out and buy stocks now. Let me tell you, this country will be like a rocket ship that goes straight up. Sounds very similar to his speech when he was saying, you're going to be so tired of winning that you're not going to want to win no more. So Trump, we're so tired of winning. Again, the thing that I want to remind you is that markets are recovering. Markets are recovering based off of hope and the hope that all these trade deals continue to get signed. I mean, markets have made a substantial recovery from the lows that we saw in the beginning of April to where we are right now. We're testing previous highs. I mean, you should never be afraid to invest during a downturn, right? A handful of you guys saw the different videos that I made when markets were selling off. Even myself, from my own account, my daughter's account, and my lady's account, I think in total, it's right around $500,000 that I ended investing during this downturn. There's still a lot more that I wanted to invest. I thought that we're going to see a larger leg down, but markets began to recover, not because things were getting better, but technically speaking, things were not getting worse. And because of that, markets began to recover as Trump began to kind of step away from being super aggressive with tariffs. He supposedly was open to negotiation, and he therefore, wasn't making matters worse. But now for him to come out and say that, all these things are going to happen, markets are going to skyrocket, I think he's forgetting the big concern that it doesn't matter what he tweets. It doesn't, I think like the past 2 to 4 months, we've kind of been in this this cycle where when he sends out a tweet, it becomes very obvious that he can influence markets for a short period of time. And right now is a really good example. There's hope because of what he continues to promise. There's nothing that actually has been delivered, right? The one thing that no one is taking into consideration, at least not the market right now, is that with these tariffs, which again, these tariffs are still very much present. There's a standard 10% tariff that's still going to be implemented into the UK and to a handful of these different countries, especially China. These tariffs are going to get passed down to the consumer. And the stock market is a leading indicator for our economy, so it often gets ahead of itself. So the market is recovering quicker based off of hope, but it's also not taking into consideration the lagging effect of our CPI data report, the way that inflation is tracked. Because yes, for the most part, we haven't seen inflation tick up very much just yet. But again, it's because it doesn't instantly react to the way that the market does. So I think it's going to be very interesting to see how, with the numbers that are coming out, the U.S. layoffs are skyrocketing. U.S. employers announced 105,000 job cuts in April, the highest for any April in the past 5 years, excluding 2020, which of course was during the pandemic. This is the highest count since April of 2009. I mean, if you really, again, ignore the noise, if you really focus on what is currently going on, there's still uncertainty. Tariffs are being added to the mix. The average American is spending more on a mortgage than they would be renting. It is cheaper to rent than it is to own. It is incredibly expensive for the average American to live in the US. There is no question about that. But yet markets are still recovering and pretending like none of this is an issue. The thing that I also want to make sure that you are very much aware of is that this remains the president's biggest problem. So Trump wants lower rates. This is originally when Trump was begging and threatening Jerome Powell, who's the head of the Federal Reserve, to cut interest rates or he will remove him. Again, surprise, surprise, he had to back down because anyone with common sense would understand that Trump cannot do anything to the head of the Federal Reserve in removing him when he's in power. The Fed isn't cutting, which again, we saw this just a few days ago or yesterday, that the Fed did not cut. They paused once again, and it seemed like he was not in a rush to start cutting anytime soon, and no one's talking about this. He made it very clear. He wants the data to support the cut. It's all data dependent. And in my opinion, I believe that he knows that these tariffs are going to get passed down into our CPI data report, which is our monthly inflation report. It takes time, but then it will reflect. And then at that point, the Fed can choose to react not based off of empty promises made by the president, but because, again, the data is supporting it. So this is the thing that I love talking about is bond yields keep climbing because markets are bracing for higher inflation and supply shock, not just listening to political noise. How much is the market's movement right now all based off of political noise? Hopes, tweets, but nothing is actually improving so far. Trading the rally, and this is the one thing that I shared on my Instagram, trading the uptrend, the rally, is great, but don't be fooled by short-term rallies. There's nothing wrong with markets recovering. I mean, it's exciting. Why wouldn't you want to make money as markets continue to recover or try to recover in this short period of time? The thing that I want to make sure that you are reminded is that fundamentally, a lot needs to improve. And a tweet of an empty promise will not save us. Even if the U.S. does sign or come to an agreement with China, I do believe that for a short period of time, the market can react in a positive way. But as soon as data begins to support that our economy is continuously slowing down, just like our GDP report showed that we saw a contraction for Q1 of 2025, once we see that inflation is going up, unemployment is going up, then yes, it will be at that point a ticking time bomb for the Trump administration and the Federal Reserve to start cutting interest rates. Because then at that point, every economic report should be able to show and support the case that our economy is slowing down. And there's nothing wrong with that. It's just being self-aware, having common sense in this market full of chaos. And again, I'm not here to discourage you to invest. Even myself, right? As markets dipped down, I was not afraid to buy into the dip and make money as markets began to recover. But it's also important not just to have a micro outlook in the market, but to understand the big picture. And the big picture is that right now, fundamentally, things have not improved, not yet. And if you understand how tariffs work and that they get passed down to the consumer, once our reports begin to reflect that, it would be common sense to assume that markets will begin to downturn because inflation will begin to go up. And remember, going back to this thing, understanding that the Fed isn't cutting rates, but bond yields continue to rise. This is the big concern because the U.S. still has to refinance its debts. Remember when everyone was saying is that, oh, Trump is playing his cards right. He's forcing the Federal Reserve to start cutting interest rates. Again, Trump had to back down because he saw that he wasn't able to force Jerome Powell or anyone that's part of the Federal Reserve to cut interest rates until economic data supported it. Some people hate that. Some people, again, it doesn't matter what people think. The Federal Reserve is an independent agency, right? They are not influenced, or nor should they be influenced by the President of the United States and what he thinks they should do. And I think that's just an important thing to understand, that even if markets do begin to uptick, embrace it, make your money, but don't be convinced that this is how things have to continue when fundamentally things are not actually getting better. I mean, I had a lot of fun today trading Tesla. I went short for a small period of time. I went long on another. I made $4,100. I closed out my trade. My last trade was, it was a very simple setup. So I felt like today markets were somewhat choppy. I shared this with my LPP team, where one moment we're skyrocketing, another moment we're falling, another moment it's beginning to recover, and then going into the close that begins to de-risk. So a lot of scalping today. Scalping is not designed for beginners. It's not really designed for people that are under the PDT rule. It took a lot of entries and exits and opening up longs and opening up shorts for me to have made the $4,000 that I did. But I enjoyed it. It's something that I'm okay with doing. But I also do prefer when direction is incredibly clear, right? We're either having a bullish or a bearish day. Those are definitely easier days to trade. Today was enjoyable. It was a little bit more exciting, but that's just because I was able to work with the market in the way that it continued to get rejected at the same range and it continued to find support at the same range once we started to consolidate. So we'll see how tomorrow continues to trade. Let me know in the comments section what you think. I hope that earned a thumbs up. Hope to see you for tomorrow's live trading session. If you want to tune on in, second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.